So you're told that you and Kali, hope you're all there. Jua and Kali have been trading. Let me go back. Jua and Kali have been trading as Jua Kali Enterprises since 1st January 2016. They have not filed individual income tax returns for the year 2017. The Commissioner of Domestic Taxes has issued an estimated assessment of 784,000 to each of the partners for the year 2017. They share profits and losses in the ratio of 3 to Jua and Kali respectively. They are preparing to appeal against the assessment and have approached you for tax advice with the following details. May 2017, question 3. On the debit side of the cash book summary, you have debit side is about how cash came in. Credit is how we spend the cash. So have the opening balance of the cash. Capital was introduced by Jua and Kali, 600 and 900. Receipts from debtors should help us get the credit sales. Cash sales to Konago hapo. Rent income, that should be other incomes. Sale of furniture to Konago hapo. On the credit side, we have the payments to creditors. It should help us get the credit purchases. Purchase of furniture, capital allowances. At the rate of 10% panic, right? Motor vehicle expenses, are they allowable? Motor vehicles are allowable. Electricity, is it allowable? Rent expenses.
Allowable.
Right. Purchase of motor vehicle. Capital allowance at the rate of 25%. Salaries and wages, are they allowable? Yes. Office capital allowance at the rate of 10%. Thank you. General expenses, they are allowable unless otherwise stated. And of course, we have the closing balance of the cash. The cost of furniture sold was 160,000 and had accumulated depreciation of 14,000 as at 1st January 2017. Profit on disposal was credited to the income statement for the year 2017. So proceeds on disposal, we bought it at 160, we've depreciated it totally by 14K. So its net book value is 160 minus 14. So the furniture valued at 146 is being sold at 170 per June. So you're selling at a profit of how much? 24. So the 24 is a non-taxable income. You need to remove. All the cash sales were paid into the bank with an exemption of 440,000, which was debited in the income statement as general expenses. But related to the following items, partners' children's school fees, is it allowable? It's allowable. Purchase of goods, that should be cash purchases. Tax appeal expenses, allowable, disallowable? Tax appeal is allowable. Insurance policy for partners' life. Computer software, we give it the capital allowances here. Other information provided to connect inventory, opening and closing, creditors for goods, debtors for goods, electricity expenses prepaid. Repayments at the beginning will add or less.
Yeah.
Repayment at the beginning will add, at the end will less. So then accruals at the beginning will what? Will less, at the end will add. So that takes care of the rent owing and salaries and wages owing. Furniture, story yake iko hapo, lakini tumezungumzia kwa note number 1. The business reported a net loss of 424,500 for the year after cutting the following expenses. That is the reported net loss. We'll add back the disallowable expenses, salaries and wages, including partner salaries, salary to partners to add back. expense for the year included 20% for private residents for JUA, while electricity and 20% bills paid on behalf of CARI. Something is disallowed. Capital allowances in respect of the business had not been considered. However, depreciation had been debited in the income statement at the rate of 20%, meaning depreciation will charged. So you need to add it back, right? The partners are entitled to interest. So sales and profits for the year were understated and overstated by 20% respectively. When sales are understated, profit is also understated. Add back. Add back. When purchases are overstated, profit is understated. Remember the opening stock and purchases in direct relationship. Closing and sales direct relationship with the profits. Partners are entitled to interest on capital at the rate of 10% per annum on their capital contributions, and the interest was included in the figure for purchases for the year. So purchases is Mashida. With supporting computations advise the partners on the accuracy of the estimated assessment issued for the year 2017 and prepare a schedule of total taxable income for each partner. Hint is very important. Start with what? The adjusted. Now, for us to start with the adjusted net loss, first of all, we need to do some workings. Please start with the control account. So that we need to know how much were the sales that were reported, because those sales were understated. It's an asset account. So opening balance of the debtors. I think 240. And the closing balance 360. Transactions during the year. Do you have some receipts? Receipts from debtors. Sorry. We debit bank and we credit the respective accounts. So to happen on receipts of how much? 1,700, right? In thousands of shillings. Do you have any return inwards? Any bad debts? So how much is our credit sales? You know that total sales equals to cash plus credit sales. Total sales equals to cash sales plus credit sales. Our cash sales in happy. I think 1,000. That credit sales is 1820. So this figure of 2820 imekuwa understated by 20%. So we shall correct it at the right time. So we'll correct it at the right time.
Excuse me, sir.
Uh-huh.
Can you mute the lady by the name Irene? I'm getting distracted. I think she's in a noisy place or something.
So hi. So you have 2820. Mark immediately. It's allowable. For taxation, everything is allowable. Even marking is allowable. Need some bet. Sawa, tuendelee tuone. So remember, the 2820 is the figure of sales that was reported, but that figure was understated by what percent? By 20%. So we shall take care of the correction later. Working number 2, creditors control account. Creditors control account. It's a liability account, right? So you have the figures in thousands of shillings. The opening balance is the credit balance. Balance broke down for the creditors. I think 400. So you have 400. And the balance carried down to 280. Transactions during the year. We have payment to creditors in the cash book summary. 880 still. Tuna credit bank na debit the respective account. Bank inapunguka. So hapa tuko na payments. An amount of 880. So how much is our credit purchases? $700. And we know that total purchases equals to cash plus 760,000. So cash plus the credit purchases. So total purchases equals to cash plus the credit purchases. Our cash purchases ni ngapi? In note number 2, still. So we're having 200 and the credit purchases is 760. Giving us 960. But there is something we need to remove. Note number 6. Note number 6. So note number 6, the partners are entitled to interest on capital at the rate of 10% per annum on their capital contributions. This interest on capital was included in the figure for purchases. So can we less interest on capital? So the interest rate is 10%. Or capital contribution pale juu kwa cash book summary, jua ako na 600, kadi ako na ngapi? 900. So 10% of 1500 is 150. 150. So the net purchases 800 and what? So that 810 was overstated by 20%. Based on which point? Point number 5. So again, we shall correct the mistake. We shall correct the mistake. Ile kazi imebaki hapa ni moja tu. Utakuta depreciation na utafuta capital allowances. Shapata hizo mbili, then we are done with the question. So maybe let's get working number 3, depreciation. Depreciation. So identify all assets that are there. Now we charge depreciation at rate yangapi? 20%. So assets totally is purple. On the cash book summary, we had purchase of furniture. So you have furniture. Furniture.
200.
How much? The furniture that we purchased?
200,000.
When your depreciation in 20%. 20% of 200, 40. Another asset that was purchased, we have motor vehicle. We have motor vehicle, you purchased motor vehicle valued at how much? Depreciation rate is money 20%. 20% of 600 looks like 120. Another asset, we have partitions. Partitions valued at how much? 180 times 20%. How much? 36. Kuna nyingine? The software somewhere, not number 2. So kuna software. So computer software was of how much? 550. So 50 times 20%, 10. Hiyo furniture ingine ni ile iliuzwa. Sioni kitu kingine. Then we look for the capital allowances. Sorry. 206. So for the capital allowances, still on the same assets. Still on the same assets. Kuna furniture. Furniture, the value is 200. What is the rate for furniture? 10%. Inakuwa 20. Motor vehicle. The value is 600. The rate is what? 25%. That looks like 150. 150. After the motor vehicle, you have partitions. 180. Partitions to 10% here. So that is 18. Then you have the software. Valued at 50. Software placing 25%. That gives us 12.5. So the total capital allowances 225. So kazi tumeilegeza. So you can kill the two birds now with one stone. Wanajiita Jua Kali Enterprises. Jua Kali Enterprises. The 207 2017 adjusted taxable income computation. So 2017 adjusted taxable income computation. Wamesema tuanze na nini? The reported. Let me put it in thousands of shillings. The reported net loss. Clear. So we have reported net loss. I think it does better. So they reported a net loss of how much? Note number 4. So 424.5 or 424,500. If you've not done in thousands of shillings, and it's a loss negative for brackets. Then we add back what?
Disallowables.
We add back the disallowable expenses. On the discoverable expenses, unaanza nayo note number 4 yenyewe. Can we add back salary to partners? So salary to partners, 100 plus what? 100 plus 80, that is 100 and 180. Rent expenses for there include 20% for private residence of Jua. So do you have rent for Jua? So you're supposed to remove what? 20% of rent for the year. Rent equal balances at the beginning and at the end. So you start from how much was paid during the year as rent? 300 and so we paid 394. Ndio. Tukianza mwaka tulikuwa na prepayment ama accrual. It's rent owing, that is accrual. Ndio. Accrual at the beginning and we less. So we less how much? 78. And at the end we have an accrual again which is supposed to add how much?
44.
44. Ndio. So get the difference, get that Kesabu 20% of it, how much? Yes. Repayments at the beginning we add, at the end we less. Accrual to the opposite. Giving us 72. That is the 20%. Right. Then can we have electricity token? Electricity ni 30%, ambayo ilikuwa ya gali, ndio. So we need the 30% of how much electricity was paid during the year? I think 78. So 78. At the beginning we had prepayments or accruals. Electricity is prepayments, ndio. Prepayments at the beginning and or less. Prepayments we had. Ndio. But then prepayment at the beginning inamaanisha nini? Nikifunga last year, nilikuwa nimelipia expense ya this year. So there's a certain percentage, there's a certain figure of this expense that I've already paid for. So whatever I'm paying this year is actually a top up on what I've already paid. That's why the prepayment at the beginning we add. So we are adding simply because there's a certain amount that had already been paid relating to the current year. So whatever you bring on board is actually an addition on what had already been paid. So, and of course, if I have a prepayment at the end means that I have overpaid. So the total amount I paid for this year is an excess. That's why I have to remove it. And the opposite explanation talks about the accruals. So prepayment at the beginning, how much do we add? 472. And we less at the end of how much? 30. Okay, so times 30%. 156. Capital allowances had not been considered, depreciation had been debited. So can we add back depreciation? Tulipata ni how much? 206. Capital allowances tutaziless baadaye. Sales and purchases for the year were understated. Sales were understated, profit was also understated. Can we add it back? So add back sales under cost. 20 over 80. So the amount reported was not 100%, it was 80%. So 20 over 80 of how much? Of 2820. Giving us 7. 75. 705.
705.
Thank you, 705. Alafu purchases zilikuwa nini? Purchases zilikuwa overstated, right? When purchases are overstated, profit is understated. To correct, we add it back. Yeah. So also add back purchases. Purchases overcast. Purchases overcast. 20 over 20 over 120. The amount reported is excess by 20%. Leo. There's 800 and what? 810. Giving us what? 135. The partners are entitled to interest on capital. It was included in the figure for purchases. Si ukishaitoa maana yake imeisha. Ukimaliza hiyo, penye naona kuna kazi nyingine ni kwa note number 2. General expenses. All the cash sales were paid into the bank with the exemption of 40, which was debited in the income statement as general expenses, but related to the following items. Can we add back partners' children's school fees?
Yes.
So school fees of how much?
80.
80. Purchase of iko sawa, ndio. Share nayo. Tax bill
40.
we add it back, ndio. Tax bill of how much? 40. Insurance for partners life. Kwa sababu ni ya partner. 70. Computer software. Here to choice, ndio. Waliweka the cost of software for income statement, an amount of 50. Now don't go back to the cash book summary. Once tuna kutafuta kwa vitu zingine za kuweka hapo. Hawaja tuambia kuna kibaya chenye kilifanyika huko. So as far as what is supposed to add back is concerned, we are done with it. Then we less. Can we less capital allowances? Capital allowances were 200 point what? 200.5. And can we less the gain on sale of furniture? We sold it at 170. And what is its net book value? Cost is 160. Accumulated depreciation is 14. So we made a gain of how much? 24. So that gives us adjusted business income.
Kila peke.
16.84. So this minus this minus this 10.45. Great. What of the allocation schedule? For 5 marks after getting the 9 marks. Can remove this one. In part 2, they want us to do the allocation schedule. Partners ni wawili peke yao, tuko na Jua na nani? Tuko na Jua na tuko na Kali, alafu tuko na total zao. So Jua and Kali and their totals, you can still work with their thousands. Right? Tuanze na kuwapea nini? Salary. Joe was getting a salary of 100. Akali akapata ngapi? That is 180. Do you have interest on capital? Tulikuwa tumecalculate. So 10% of 600 to 60, sio? So in 60, na mwingine ni ngapi? 90. Total is 150. We don't have any commission. We don't have any bonus. We don't have any interest on drawings. Sio? So story yetu inaishia hapo. We have the share of profit. So from the business, we had 1045. 1045. Out of the 1045, you pay salaries of 180 and interest on capital 150. Remaining how much? 715. And how are they sharing profits and losses? 2 to 3. 2 point yours, Leo. So 2 is to 3. Total is 5. So 715 times 2 over 5.
286.
256. And now the difference. 429. So na add ya Joe unampea, add ya Kali pia umpea. Then you bring in other incomes. Ambapo nimeona tuko na rental income. We make an assumption that makes our life easier. Residential. So that you put a dash. The other one was which one? 2019. May, November. So May 2019. Question number 4 is here. Solomon. I'll conclude on that. We go to May 2019. So May 2019 for boy, we are there. Right. So Solomon started a merchandise business, solo traders, on 1st January 2016. He had not filed individual income tax returns for the year 2016 and 2017. The Revenue Authority announced a tax amnesty where one qualified provided they filed returns for the year 2018. Mr. Mariba has provided the following details to you to assist in filing his returns. An analysis of the cash book for the year 2018 is as follows. Cash book on the debit side, we have the opening balance, cash sales, checks from customers, getting a credit sales, checks in the credit sales, refunds from suppliers, In effect, debtors sama creditors, suppliers ni creditors, sindio? Rent incomes ni other incomes. Sale of fixtures, stone inataka nini? On the other side, fixtures and fittings acquisition, we give it the capital allowance, sindio? Suppliers of goods, selling purchases. Bank charges, allowable, disallowable. Allowable. Motor vehicle acquisition. Capital allowance at the rate of. Thank you, 25%. Salaries and wages, allowable, disallowable. Office computers. Capital allowance at the rate of 25%. Only computers. Rent and rates. Is it allowable? Yes, it is. Electricity. Telephone and postage. Refers to us. It affects our data. Computer software. Capital allowance. Other information. Inventory, suppliers of goods, trade debtors, accrued electricity, prepaid rent income, motor vehicles, prepaid salaries and wages, fixtures and fittings. So you have the opening and the closing balances there. Non-current assets are stated at cost. However, the business had charged depreciation in the income statement. Opening and closing inventories were overvalued and undervalued by 20 and 10% respectively. All expenses and non-current assets comprise 40% non-business activities. Hapo lazima tuwaposhe. Kuna ile ambayo si ya biashara, ingine ni private. Your 40%. So what is for the business, we have to do it, the 60%. Total sales and purchases are inclusive of VAT at 16%. So sales and purchases have been overstated, right? The business had issued credit notes of 34,800 for goods returned by credit customers. Great. The cost of fixtures disposed was 220,000. From the accounting records, the accountant had reported a net loss of 186,400. A statement showing that corrected and adjusted taxable income of solo traders for the year 2018. Great. Debtors control account. So debtors control accounts, opening balance. So we have the balance breakdown of the debtors. 1st January is 170 happy. 174. Balance carried down at the end of the year. 487.4. 487.2. Transactions during the year. Refunds from customers. So refunds to customers. Walikuwa wametulipa. So refund na debit. Tukua refunds, ndio. So have the refunds of how much? That's 7.4. That's 7.12. That's 7.12. Any other thing affecting our data? Yeah.
Checks.
So checks from customers. Yes, checks from customers to Banana. The receipts. So you have the receipts, you can call them checks. So just the receipts. We received how much? 649.6. 649.6. Chini. The business had issued credit notes. We issued to customers. So credit notes issued are meant to correct an overcharge or undercharge. Overcharge. So credit notes issued of how much? 34.8. Sioni kitu kingine. So how much is our credit sales? The balancing figure. How much? 960.48. So 960.48, no problem. Now kumbuke, as per the note number 6, unapo VAT ya 16% lazima utaitoa. So working number 2, creditors control account. Balance brought down for the creditors, somebody? 278.4. Balance carried down. 139.2. Transactions during the year. Do you have the checks? Suppliers of goods. So we credit the bank, we debit this account. $696. Let me give a break. You have refunds from suppliers. Refunds from suppliers, tuweke side gani? Tulikuwa tumewalipa wakaturudishia, sio? So you have the refunds of how much? 30? 41,760. So 41.76. Things you need to give it. Let me give it. I can't see. So balancing figure How much the credit purchases? Proper data that will cash sales are. How much the balancing? 515.04. So total purchases cash plus our cash purchases equals 20 and 2 as equals 0. So 0 plus 515.04. We can also do our total sales cash plus the credit sales, right? Sales that is in is a cash 4408. You see that 4408 credit sales labor ngapi 960.48. Totally kuja ngapi? 5368.48. The last thing to be done before maswali is number 3, cost of sales. Cost of sales. Let's get the GP. Opening stock plus purchases minus closing stock. Why are you getting them? Now tumekuwa the net loss. Ndio. Alafu examiner is too vague on which expenses had been deducted. See that point? We don't know which expenses had been deducted. So you cannot start adding back what you've not been told that it was deducted. Story that after the following had been deducted. So this is the income statement of this company for the year 2017 or whichever the year. But if they're silent, you don't know if there's any expense that was deducted in arriving at that loss of profit. And if there is any, you need to know which expenses are these. Examiner and to feature. So lazima twende the long way. So cost of sales and purchases you less the closing stock. Purchases equal. So the opening stock is how much? This one is 46, 36, that's 600. And the purchases, right? Purchases is gonna VAT. So need the correct figure for purchases 100 over 116. Times how much of our purchases? 515.04, giving us 440, 444. Then we less what? We less the closing stock. So closing stock, closing stock, closing stock. So our closing stock is how much? 225, right? And if overstated and understated. Closing stock was understated. So it is 20 over 20 over 8. 10%. So we need 100 over what? 100 over 90. We're not looking for the mistake, we're looking for the correct figure, the 100%. Times how much? 225. What is that? 250. So cost of sales 3794. Great. So can we have the GP? Badala penye imefika tunaenda direct sasa. Kuna sales to kuna cost of sales. We can go direct and get our GP. Sindio? So wanajiita nani? Solo traders. Now this question, I go back to the question that you asked. Why not start from the reported loss or the reported profit? From the accounting records, the accountant had reported a net loss of 186,400. We are avoiding that statement for one key reason. And this key reason is we don't know how they arrived at that loss. There is nowhere else to be told that these expenses had been deducted or these incomes had been included. So ideally speaking, we don't even know which ones are we going to add back and which ones are we going to less. So, kiangalia kama nje tumefanya zilikuwa after deducting the following. Yeah. And even general expenses walisema it was debited in the income statement. That's why you had to at least look at tumeambiwa ni nini ilikuwa added back, ni nini ilikuwa imeaffect hiyo income, hiyo profit kama hiyo loss. Hapa hatujaambiwa. Sasa tunakumbuka sisi ni nani? KRA. Wewe kama KRA taxpayer ametoka hapa akakwambia tulipata loss ya hii. Na ja clarify ndio ulifikia loss. So you start doubting everything. So you prepare your own income statement. So you're preparing our own income statement. So solo traders 2018 taxable income computation. So the figures in thousands of shillings is okay. So you have the sales. The sales pia ziko na VAT. Sindio? Sales ziko na VAT. So sales zetu 100 over 116 times how much? Times 5368.48. Giving us how much? 4628. 4628. We less cost of sales. Now cost of sales we're going to 3790 ngapi? 3794. So that we get the gross profit. Eight 834. After the 834, we less what now? Allowable, right? We less allowable expenses. Kama tungekuwa na other business income kama foreign exchange gain realized, ungeiweka hapo. Sawa. Foreign exchange gain that was realized, ungeiweka hapo. Insurance compensation on stock, ungeiweka hapo because it's part of the business income. So less the allowable expenses. We less the allowable expenses. We start with note number 1. Fixtures and fittings. Can you give it the capital allowance? Alafu kuna kakitu tuliambiwa. Note number 5. All operating expenses and non-current assets comprise 40% non-business activities. So meaning 40% ilikuwa for private use. And you're not preparing the income statement for this person as a private individual, you're preparing for the business. So expenses zetu zote 60% were allowable. That's how. Both operating expenses and capital allowances. So some operating expenses and fixed assets. So the expenses zote in short. So you can start with the fixtures and fittings. The rate is 10%. 10% of, I think 183 by times what? 60%. Giving us 10.98. Suppliers of goods to share deal nazo. Bank charges. But it's also an operating expense. It's not a finance cost. It's not an interest that the bank charge 60% of 14.8, giving us 8.88. 8.88. Motor vehicle, can you give me the capital allowance? So motor vehicle, is 25%. So 25% of 500 times what? 60%. 75. Salaries and wages. Hakuna private there. There's no issue with it. So salaries and wages 60% of 480. 288. 28. Just like that. Office computers. The rate is 25% here. So 25% of 240. Then we take what? 60%. What will judge? 30? 36. Do we have rent and rates? Rent and rate 60% of 62. Angalia kama kuna Kwa note number 2, kama kuna stories za rent, salaries tumenyoroshwa, tapata just hiyo. Rent ni rental income. Sasa kwa salaries kindly cross to hivi, sababu najua umeandika kama mimi, salaries leta hapa chini. Rent kwanza ni ngapi? How much? That's 7.2. So salaries, the amount paid for salaries during the year is 480. Right? Do you have the prepaid or approved? Prepaid. At the beginning of 320, you're supposed to add, right? And at the end, we add, we less how much? It's 140. 140 still. Then we take what? 60%. Rental income. Here over the rental income, say rental expense. There are two different things there. So salary is 12.5. $396. After the salaries, we have electricity. Na iko na maneno kwa note number 2, si ndio? So electricity, how much was paid during the year for electricity? 58. Si ndio? Tukianza mwaka tuko na prepaid ama approved? Approved. Of how much at the beginning we less?
66.
1, 2. Then we add how much at the end? 130. 30.68. But now we only need what?
60.
How much is the electricity expense? How much? 63.33. Great. A telephone, right? Telephone note number 2, do you have any issue with it? There's no telephone there, still. So telephone expenses, we have a total of 62.64. 62.64 times 60%.
84.
That's 7.584.
Yes.
Right. Reference to customers shall denial. Can you include the computer software? So software we have 25% of 60, but we need what? 60%. Giving us 9. 9 flat. Good. Note number 2, sioni kama kuna kingine cha kuadjust hapo. Note number 3 sorted, number 4 sorted. All the expenses, total sales. We're done. We're done. So I simply get this total. Just let's have a
I have a question.
Okay.
Note number 8, the cost of fixtures disposed of was 220. Doesn't affect the fixtures and fittings.
Okay, the cost of furniture disposed of.
The cost of fixtures. Note number 8.
We've not been told whether, first of all, we are not in the business of buying and selling furniture. So as far as you're concerned, that is noise.
Okay.
You're only interested in the furniture that was purchased so that we can charge the capital allowance on it. Whatever we sold, it's no longer with us. If we sold at a profit, it's a non-taxable profit. It's a non-taxable income. If we sold at a loss, it's a disallowable expense. 6. Yeah. 673.98. The difference. 160.02. Other incomes to a question. Solo traders. By the way, remember it's true. This is not a partnership. It's a sole trader. Partnership peke yake, no other income under allocation schedule. Sole traders, companies, other incomes zinakuja hapa chini. Now for other incomes, the only thing I see there is what? Rental income. Najasema kama ni commercial ama so a good assumption of residential. Make sure you give the assumption so that we now have total taxable income. $160.025. And this one. We did Sharon and Primus, November 2019. Question 1-3. Pardon. They have Sharon and Primus there.
Which question kindly?
November 19, question 1C. November 29, 1C. So go through it some 5 minutes or so. Alafu tukuje tumalize. November 2019, 1C. Sharon and Primus are partners running a hardware business. They have approached you to assist them prepare the partnership returns for the year 2018. The following information has been presented to you. The partnership agreement provides that profit and losses will be shared in the ratio of 2:1, respectively, for Sharon and Primus. Partners will be allowed to withdraw up to 100,000 in cash without being charged interest. So the first 100,000, no interest to be charged. Any excess withdrawals will be subject to interest at the rate of 8% per annum. So remember, that statement says that cash drawings of up to 100,000 hakuna interest. Clear? Like any drawings of goods, whether you're withdrawing 10,000 of goods or whichever the figure, whichever the value, it attracts interest at the rate of 8%. And of course, also any cash drawings above 100K. Still. So drawings of goods sorted plus cash drawings of over 100,000 will attract an 8% interest. Each partner will be entitled to a monthly salary of 60,000. However, no salary will be paid to any partner in the months of January, May, and September due to expected losses based on analysis of past trends. Partners will be entitled to the commission. So can you just say that partners will earn salary for 9 months? 60,000 takes 9, right? The balance sheet, the balances in the books of accounts as at 1st December 2018 and 2017 included the following. Now, there's something that the examiner did here, which many students wanaweza wakanyoroshwa. Angalia the opening balances penye zimewekwa. Zimepelekwa extreme right. Ndio. Under normal circumstances, tumezoea opening balances, closing balances. Ile pressure inapata example, sijui natokanga wapi. You see there's a very high chances of messing up there. So you need to be very careful before you start handling the question. Angalia opening balances ziko side gani. In our case, opening balances zimeenda pale mahali tumezoea iko closing balances. So make sure you consider such kind of things. And even as we do them, we are clarifying on them and insisting on them just to prepare us that anything is possible. Examiner will always look for the ways of confusing you. Ukiingia box yake anasema hallelujah. So simwandao aseme hallelujah. So accrued commission due to partners, accruals at the beginning will add with less. Accrual at the beginning will less. Whether it is an income or an expense. Accrual at the beginning will less, accrual at the end will add. Repayments will do the opposite. Account payable, subsidy for creditors, control account. Accrued advertising at the beginning will less, at the end we add, right? Prepaid royalty income, royalties at the prepayments at the beginning, we add still. And the prepayments at the end we do what? We less. Accounts receivables, subsidy, accrued salaries and wages, partners excluded. Accruals at the beginning we less, at the end we add. Then accumulated depreciation, tutaona vile tunashughulikia. Kama hawajatuambia chochote ni kelele. After all, it is disallowable. No. Extracts of cash payments during the year are as follows. Commission paid to partners equally. Stated up allocation schedule. Na wamesema ni equally. Kwa hivyo silete mambo ya profit and loss sharing ratio hapa equally. Purchases of goods for sale. Sio ni cash purchases. Kwa hivyo wamesema ni extracts of cash payments. Advertising expenses allowable, disallowable. Salaries and wages. Motor vehicle expenses. So ni runnings, ndio. Electricity. Office partitions. Capital allowance at the rate of. Partitions ni 10, ndio. 10%. Office equipment. Capital allowance at the rate of 25 or 10. 10 way. Yes, 10. For it to be 25, lazima equal office electronic, not just office equipment. Office electronic equipment, computer, photocopier, scanners, duplicating machine, calculator, ISO. Those are the ones that qualify for 25%. Office electronic equipment. Nasema tu office equipment, aka kachaka. Kasi itoka kwa kichwa yako, wewe ni KRA. Nawe kama KRA upendi mchezo. Sasa, you can only charge a bigger expense if he has clarified But as KRA, you love incomes, you hate expenses. So you cannot claim capital allowance at a higher rate of 5% unless it is very clear. But you can give it at a lower rate of 10%. Means to employees, is it allowable? Yes, it is. Loan interest. Interest on money is allowable. So finance cost. Cash withdrawn by partners. Does it affect the income statement? It doesn't, right? Drawings of goods, tungekuwa nazo. Doesn't affect the cost of sales. All receipts were channeled through the account and included the following: sales, all were on credit terms.
1.6.
So sales, itasaidia kwa debtors control account. Royalty income, other incomes. Proceeds from sale of office equipment, the taxable, non-taxable. Non-taxable. Computer leasing charges. Any other incomes. Umechukua computers zako, umerentishia mtu. Sio ni rental income. Leasing charges, sio ni other income. The partners withdraw hardware goods for personal use as indicated below. So drawings by Sharon and Primas, drawings of goods had an effect on our cost of sales. So closing stock was understated. In December, some of the hardware goods which were valued at 60,000 were destroyed by fire. Compensation of that 5,000 was received from the insurance company. Insurance compensation on stolen goods, the taxable income of the business, right?
Yes.
So 8 marks, taxable profit or loss of the partnership for the year 2018. Then a schedule showing the partner's allocation of taxable income. Ametuambia tu ignore opening and closing stock. First things first. Let us consider about. It's your time to shine. Humano unaandika tu debtors control account alafu na relax. Naambia neighbor what are you writing? The debtors control account, the opening balance, receivables 1,700.
Yes.
And the balance carried down
59.
59.
Mm.
Transactions during the year. We have
16.
the receipts. They were all on credit terms. So when we debit the bank, we credit the respective accounts, right? Think of how much? 1,600. Hakuna kitu kingine kimetu affect, ndio. So how much is our credit sales? 5.8. And we know that total sales, cash plus what? Cash plus credit sales. So our cash sales is 0. Our credit sales is 5,800. Na maana ametuambia sales ziko na shida? Hakuna. Number 2, creditors control account. So the opening balance of our creditors, 16,000. Now there was an error there. It should be 1.6 million, not 16,000. What happens if you get an error in an exam? You identify it, you assume it's not there. And I'm always very happy because you rarely see the error. This is kama hiyo mjaiona, sio?
Yeah.
Yenye ni wale wasee. Lakini naomba Mungu sana msione example. Sio? Because sometimes you might think it's an error, kumbe ndio Kiswahili imekataa, Zungu imekataa. Sasa, but when you see an error, don't correct. Work with it as it is. So, yeah, it's criminal to become an examiner when you are a candidate. So opening balance, it should be 1,600 instead of 16,000. And the closing balance is when
2,000.
So I want to imagine when you attend this one and of 3 months. That is 2,000, the closing balance. There are no transactions during the year for the credit purchase. And then is a cash. So the balancing figure becomes what? The credit purchases, an amount of 400. So that error was too bad. If I can affect our answer. Because that's a credit purchases, it was ambiguous. Then total purchases equals to credit plus cash. Our credit purchases is how much?
400.
Our cash purchases clearly open there. 3 is it 1,000?
1,000.
We're having 1,400 as our total purchases. Great. Number 3. Can we have our cost of sales? You may or may not be punished because this account is for credit sales, credit purchases. But the 1,000 is not a credit purchase, it's a cash purchase. I know here put up at the same figure, like you may have the wrong place. So hapo ndio unapitishwa the mass of the examiner. Sasa ya ila kama exam ilikuwa na maneno yake ngumu, nasema hiyo mpitisho. Lakini kama exam ilikuwa very manageable, small mistakes like those ones can cost. So opening stock plus purchases minus opening stocks purchases has an error just here. Opening stock is how much? So opening stock wametuambia ni 0. Walisema to ignore, ndio. Purchases ni 1,400. Then minus now closing stock, we should be minus the closing stock plus what? Drawings of goods. Because drawings understates the closing stock. So yes, closing stock is 0. Lakini lazima turudishe drawings of goods ambazo zilikuwa ngapi? Note number 5. It's 110 plus 60. That is 1 ngapi? 170. So the cost of sales equal ngapi? 1,230. $1,400 minus 170. Mani menyorosha. Iko sawa. So can we get our GP? Gross profit, sales minus
Cost of sales.
sales minus cost of sales. We have our sales 15 ngapi?
58.
5,800. Cost of sales ni 12.
30.
Gross profit equal ngapi?
3570.
4,570. Ukishafika kwa GP, basi hiyo swali umeilegeza. Anza kupata marks zo zingine pia. Wanajiita nani? Sharon and Primus. So we have Sharon and Primus. 2018 taxable income computation.
Primas.
right? Do you have the gross profit? For 45 ngapi? 45.70. We had some other business income, insurance compensation on stock. Any business income. So add insurance compensation on stock. Compensation of how much? 35. So that gives us the gross income of 4605. So the foreign exchange gain that was realized, insurance compensation on stock, discount received, certain business incomes. Less the allowable expenses. My future student is making noise. Alright. So allowable expenses, I think note number 1 is taken care of. Takuja allocation schedule. Note number 2, the balances, accrued commission to partners itakuja baadaye. Accounts payable, tumedilina. Can we have advertising? So advertising, tuko na accrued advertising expense, right? How much was paid during the year? I think 150. 150. We less the accrual at the beginning. We less the accrual at the beginning of how much? 16 ni mwongo. Sikiane bana ngia box exam na. 340. Careful. Don't have exam na ni mjinga. And we had an accrual at the end of how much?
10.
You want that one, you stop. Then the exam. Just try to imagine the pressure on the exam. It's doable. Senior. Unatoka exam room unapigiwa fulani ilikuwa sawa. Ilikuwa sawa, ngoja awali. Results zikikuja, tawafuna anapiga tu simu kuomba notes, simazo umetaka kueleza. So advertising, what is the cost?
520.
520 or 20. Thank you. After advertising, royalty itakuja baadaye. Receivables, do you have salaries and wages? So salaries and wages, how much was paid during the year? 1390. Balance at the beginning, accrued. We less how much? We less 130, then we add for 10. So salaries for the year. $1670. Depreciation hiyo ni kelele. So stories za kuadjust tumemaliza. Note number 2, commission to partners baadaye, purchases tumedili nazo, advertising you've sorted, salaries you've sorted. Can we have motor vehicle expenses? Motor vehicle expenses of how much? 240 haina maneno. Electricity. Of how much? 80. Haina story. Office partitions. Partitions, we need the capital allowance. The 10%. 10% of 60. That's 6. Equipment. Office equipment. It is not electronic. So lazima tuende na 10%. And 10% of 97, 9.7. Meals to employees. So means to the staff of how much? 200. Loan interest, is it allowable? So loan interest is of 35. That's tumemaliza. So how much will less? Branson and Primus. Tenda kwa allocation schedule. Distribution allocation schedule. For the income statement, we only effect it here for closing stock. Other than the closing stock drawings, we now go to the interest on drawings. So we'll go to the allocation schedule. Total expenses to less. $20, $26, $36.
3.7.
So the business income 19.4.3. So this one becomes our taxable business income. We put here the other incomes. Other incomes tuweke hapa. Hii ni partnership sio. So story yake inaishia hapo. Story yake inaishia hapo. So allocation schedule number 2. So tuko na Sharon, tuko na Primus, na tuko na Total. We have Sharon, Primus, and Total. Can we start with the salary? Each partner was entitled to a salary of how much?
16.
60,000 for how many months? 9 months.
9.
5 ngapi? 540. So Sharon alipata 540, Primus akapata 540, total ikakuwa 1080. Right. We have interest on capital or sort, something of the sort. Kila mtu alipata commission, ndio. So let's give the commission. It was shared equally. How much commission was paid during the year? We paid 100. Sindio. The balance at the beginning prepaid or approved? Approved of how much at the beginning we less? 360. Then we add approved of how much at the end? 400. So what was the total commission? 140. So totally 140. So they shared equally. So divided by 2 becomes 70. 70. Right. So walipata commission, walipata salary, na kulikuwa na interest on drawings. So let's have the interest on drawings. Interest on drawings. Pale ka space kadogo kwa working pale juu so that we don't squeeze it so much there. So maybe working number 5, interest on drawings. If we start with Sharon, the interest rate is 8%. Tunajua kuwa kila partner alikuwa entitled to drawings of up to 100,000 of cash without being charged any interest. So cash drawings za Sharon zilikuwa ngapi?
110.
So kwa hiyo 160 tutoe ngapi? Tutoe so. Sindio? Alafu ile figure inabaki tuongeza the drawings of goods of how much? 110. So 160 minus 100 is 60, 60 plus 110. 170 times 8%. $13.6. So later for Sharon, 13.6. Right? Then Primus, unit Primus, Primus, the interest is 8% of 100,000 of cash drawings, good drawings of cash. Cash drawings, the Primus zilikuwa 100. Out of the 100 drawing up.
100.
So you saw. Sindio. Alafu drawings zake za goods zilikuwa ngapi? 60. So 8% of 60. 4.8. So hapa tuko na 4.8. Total ikuje 14.4. 18.4. 18.4. So tumemaliza. Na hii interest on drawings ni less. Yes, na less. Sorry. Check note number 3 mwisho. Cash is drawn by partners. Sharon was 160. Na pale kwa introduction tuliambiwa up to 100,000 no interest of cash drawings. Alright. So that is it. Let me do. So can we have the slip of profit? So that we have the business income. So business income is it 1944.3. So how much is the balancing figure? Janja ni huu. Fanya kwanza hesabu 1080 plus 140 minus 18.4. Then hesabu unapata the answer that you get is subtracted from this. Ndio. How much? 1? 7.2.6. 0.7. 7.2.7. Positive, negative? Positive. Sasa share. How are they sharing the profits and losses? 2:1. So 2 for Sharon, 1 for Primus, right? Total is 3.
Yes.
Divide by 3 you get. How much? 20 Sharon. 495.14. 1.
1.
247. 247 or 7 times 7. Great. So una add ya Sharon yote, usiweke x kama mimi, na add ya Primus, usiweke x kama mimi.
Pelaka.
Then hapo chini unaleta other incomes. Tuko na Sharon, tuko na Primus, na tuko na total. So other incomes. Can we have the royalties? Let's have the royalties. Let's have the royalties. How much royalties were received during the year? We received 240. Sindio? Tukianza mwaka tulikuwa na prepayment ama accrual? Prepaid royalty. So how much? How much at the beginning we add or we less? Eba amechoka. We add how much? We add 100. Then we less how much at the end? 160. Total royalties? 180. 180. 180 still. Share accordingly. Profit and loss sharing ratio. 120 and 60. 120 and 60. Then we have computer leasing charges. From the leasing of computers, we made a total of 6. Share it accordingly. 6 divided by 3 is 2. 2 and 4. So we have our total taxable income. So na add ya Sharon yote, add ya Primus yote. That is it. Too much work for 2 marks. But 2 marks can take you places. Tumekatalia kwa 48. Yeah, it can make you not see wakula hili. Wanza kusema wakula wetu tulimalizana. You can have it at that point. Tuone kama kuna maswali mengine tunaweza jaribu. It's when you give a question, it becomes more of an obligation. November 2017, question 2A. I don't know if we did Dawa Limited. Swali la kwanza, Dawa Limited of November, hiyo tulifanya. Sawa. Then we have May 2017. May 2017, question 5. 5B. May 2017, 5B. November 2016, question 1B. The short one. I've stopped there. Yeah, if you go back to the 2016, I know you can be able to see a question somewhere and organization up here. So let's practice, let's continue working where we can. Penye inatunyorosha,